5K next year with some multiple contraction. Make sense of it for us.
Well, it's really there's really two stories here. If you take a look at the upside, the GDP report missing means that more of this inventory restocking is going to get pushed into next several quarters and even next calendar year. The employment numbers are going to keep getting better, and that's going to mean the economy is going to be running above trend, not for a quarter or two, but again, into next year. However, if you look at the sentiment backdrop, you have the 10-year Treasury where it is an indication that something is not right. The virus is problematic. The Fed is going to be raising rates. So you have this very weird contradiction in the market. The earnings dynamic is brilliant, and yet the tone of the market is one of uncertainty and confusion.
Nisha, you think that gets fixed? We're going to 180 on 10s. Is that right?
I do. And look, I think there's a dislocation in the bond market at this point. As much as, it should display the future outlook, and I think some of that has been priced in, obviously the uncertainty, especially with the variant. I think you have the major factors of where sovereign yields are around the world, right? Where global economies are, that's keeping bond yields here in the US suppressed. Additionally, you have the Fed doing tremendous amount of buying that's putting more pressure on bond yields. So there's certainly that dislocation, no doubt about it, between stocks and bonds. But I do think at some point, bond market will actually kind of catch up, if you will, and you're going to see bond yields kind of rise through year end. Look, labor market reports, especially the July report, has been very strong, something that the Fed was waiting for, right? Inflation was there. There's no doubt about that. Labor was where there was kind of that slack, if you will, and what they were waiting for. I think if you have another August hot month of payroll numbers, the Fed, again, split kind of between a few groups here, as Mike mentioned earlier.
Yeah.
But I think the Fed is going to have to lay down the groundwork for tapering.
Erik, if this is the case, do you see a path to 5K next year with a Fed tapering and a bond yield, in Nisha's words, going back to 180?
We're a little bit skeptical, John. We're a little bit more bearish than that. And part of that has to do with the fact that this growth stock narrative, this rebound we have seen, albeit having tapered out a little bit recently, has been a lot about the drop in the 10-year yield or longer-term yields more generally over the past few months. We certainly expect that to reverse. We see about 40 to 50 basis points of upside in the 10-year yield between now and year end.
Yep.
And that's probably going to take a lot of the air out of those growth stocks. We still like the value space, but on the whole, we do think that the S&P rally remains pretty tempered over the next few months.